Hi there, traders. This is Brad Gilbert with the FX Market Insight for Friday, the 10th of July. All right, now the US dollar was sliding to the downside, and then all of a sudden we had the weekly jobless claims numbers now, and they've come in better than expected, right? And this seems to have given the dollar a real underlying bid tone, and what that means is it's gone up, right? It's taken a bit of the pressure off the numbers, unemployment dropping or the claims dropping. Bit of a sign that obviously things aren't getting back to normal, but it's one of those ones where a few of the US numbers are impacting, especially employment. To me, the consumer confidence numbers, business confidence numbers should come into play. Inflation, well, I don't think that's really going to come in just yet, but the employment numbers are. And this weekly jobless claims is a real indication of how things are going week to week, because it is changing quite dramatically. So that shift there, as you can see on the dollar index itself, it's given the dollar a bit of a kick in the backside. It's rallied up, but it still hasn't broken through resistance. So to me, we need more than this to really give the dollar something to really push it back up above 98 on the index. So I think this is potentially a short-term situation. Now, if you have a look at just take you across to the charts. Right, just having a look here. I've left these charts. I haven't updated the trend lines. I want to show you the sort of price action we're dealing with. Now, to me, yesterday looked like a pretty good chance for Aussie, Euro, Kiwi, all to break to the top side. Sterling, well, you'd think that'd join in the party, and it did a bit. And obviously continue to see dollar CAD lower. Now, there's been a couple of shifts. This shift in the US jobless claims number stalled those moves, right? The dollar started bouncing, and as you can see with the price action here, it wasn't exactly convincing on the Aussie. The Kiwi looked like it was in for a bit of a run, and the Kiwi looks a little bit stronger than the Aussie just at the moment, but they were sort of up there as well. You had Euro up to 113.70, okay, through that 113.50 resistance. It looked all right, and then also Sterling sort of moving to the top side, and dollar CAD still drifting under 135 the figure. The data comes out, and this is sort of back to sort of normal market conditions, right? And then you see, the Aussie sort of just drifting lower. Now, the one difference here is the Aussie and Kiwi still, on the daily charts, they're still up, they're sort of still broken higher. They haven't moved down far enough to break those uptrends. But I tell you what, a breakdown through a couple of these levels will flush out some long positions, and we may just see these pairs sort of just drift back into the old range that we've been seeing the last few weeks. Now, Euro, on the other hand, you can see the price action here. This chart here is almost like technically perfect, right? And what we mean by that is, okay, you get the break through the level, it goes up, tests, come back. It should either hold, right, if it's obviously going to keep going up. But if it breaks back down, this line that was resistance starts to act as support. And as soon as it breaks back down, it becomes resistance again. It's like one of those pivot lines you hear. I hear the word pivot sort of thrown around a lot, but this is actually one of them. And you can see, for those diehards, you could sort of argue a head and shoulders here. But for those that aren't aware of what that is, so it's broken back down. This line acts as resistance, which is done perfectly. And then it's drifted lower, and now we're back in the barroom brawl, back at the lower trend line support. So you can see the trend lines, they are in play and they are working. What we're missing, once again, and this is the most frustrating part of all this geopolitical stuff, you hear me say it all the time, it's the momentum, right? We're not seeing consistent momentum. In this situation, the jobless claims numbers has really given it a bit of a kick and given traders, especially in that North American session, something tangible to trade with or trade against. And you get the strong numbers. You know that there's a lot of traders have gone long on the break of Euro above 113.50. Those positions are flushed out. And then sure enough, the data comes in strong for the dollar and it moves lower. And that's like dollar CAD also, not only was the dollar data a little bit stronger, but oil, okay, rolled back over $1. This is sort of more normal market conditions. So you got two things pushing the dollar up against the CAD, and that's right back in the middle of the range now. And dollar yen is just starting to drift. I don't know there's not too much happening there, but you'll see as I come back and show you the yen crosses, they are starting to correlate quite nicely with the US equity markets. All right, the news, let me just go to the news just to give you a bit of an overview of what's going on here. Well, okay, it looks like they're going to have a chance to look at Trump's financial records. Bit of an update on the jobless claims. Okay, the number getting better. China, okay, these guys are coming back into the news. This is a bigger issue that hasn't been dealt with, obviously, with all the coronavirus stuff going on. I still think there's going to be a massive argy-bargy between the US and China, and a few other countries getting pulled into that, particularly Australia and a few others. And then, it's just the usual old coronavirus crap. All right. So that's what we're dealing with just at the moment. Now, once again, what can we do to sort of really fine tune our trade selection and see what's going on? Well, let's just have a look at the risk on, risk off page here. US equities, right, down 1.39%. Okay, that's something to talk about. Now, if you put the correlation matrix into play, okay, US equities at the top, and you got a whole range of instruments on the downside, you can see very closely and quickly that Aussie yen, Kiwi yen, Euro yen in particular, behaving very closely with the Dow Jones, right? And that sort of works across the S&P minis, and then you've also got the treasuries as well. So there is the connection back in with the equity markets. I spoke about this yesterday, where that equity markets haven't been moving much, but if they do, and there's a correlation here, whether it's positive or negative, then you will see the make it easier to identify which pairs to trade, right? So you got the dollar index there, obviously working opposite direction to the Dow, and it's we've got some tangible things to deal with. Aussie, Kiwi, Euro, as is the yen crosses, all behaving very nicely. So, and to me, that's no surprise, because the Aussie, Kiwi, and Euro on the charts were looking the best pairs technically with setup. So I don't think we're going to see too much flow on the risk on, risk off profile. What this tells us is US equity markets are behaving a little bit with regards the US numbers, employment numbers in particular. So we're going to keep an eye out for that. Outside of that, all we can do is follow the trail of what's come out. Now it's actually quite interesting. Today we've got the Canadian employment numbers. Okay, every sort of second month, the Canadian numbers are on the following Friday. So they break away from the US non-farm payrolls, which gives the Canadian dollar a chance to do its own thing. We've just seen what happened with the improvement in employment in the US. If we get the same sort of structure of an improved result in the employment numbers in Canada, well, then you're probably going to expect to think, well, the Canadian dollar itself should rally. And vice versa, if they're much weaker, Canadian dollar falls, well, dollar CAD at the moment is going up. So it would continue on that path. So I don't know if this is where the data really comes into play. As I said, I've always been looking at since this started, the employment numbers as the real tangible number that is the big pressure point of the market. But so we'll see if this continues from here. I think it will. But with the charts, I mean, there's nothing you can do here. Now, to me, Aussie and Kiwi still look like they should be going higher. If I just give you a look at the Aussie chart here. Okay, if you look at the time frames here on the hourly and the daily, they're still going up, right? So to me, I don't think this move in the dollar, unless something else happens, I think it's just a retracement back towards resistance on the dollar index. I think we should see the dollar continue to fall, but we have lost all that upward momentum. So really, I'm still looking for the Aussie to continue higher, but it does look very susceptible to a potential break. So if you're not confident with getting long, well, you know what? I think there's a chance for a clean out on the downside, especially because if it breaks down through 69.50, it's going to break the daily support as well. And that could be enough to flush out the longs. Same situation here with the Kiwi. It's just crawling above that resistance. But you know what? All in all, it's still going up. But is the dollar going to continue with its current move or not? Well, we don't really have anything to back it up except coronavirus news, and Donald keeps telling everyone he's immune to any sort of prosecution. So, which is just hilarious. Yeah, that's it, guys. It's if anything, I mean, wouldn't you love to have seen what would have happened had the jobless claims numbers blown out, right? We would have seen the exact moves that we were looking for. And this is one of those things that you've got to manage, your performance anxiety, right? We get a weak US number there. you clean up on 2 or 3 pairs. On the opposite happens, if they currencies drift back into the range, hopefully you've moved, if you did get long, you've moved your stops to break even when they were sort of 20 points through the levels. Okay, hopefully there's no cash going, but now we're back to the a bit of the starting blocks on the euro. It's, you know what, it's not very helpful to us at all, and sterling's just doing its own thing. So just be aware, okay, the dollar CAD is going to be the major focus here. You know, going through, particularly through that North American session, we've got support and resistance, but you know what, it's back in the range. Unless we get really weak Canadian employment numbers, which would give this thing a push to the top side. Okay, maybe getting long through 136.10, but you have to look for some significant variance really to get these numbers to come into play. All right, guys, that's it for me. I'll just be adjusting a couple of these levels here on the charts to the sort of highs and lows that we've got at the moment, and that's all we can do. You're just going to sit back and wait. It's frustrating, okay, when these things don't line up, but that's trading. All right, keep it real, and we'll see you later on. Have a good weekend if we don't speak to you beforehand. Cheerio.